Hello traders, welcome back to this week's edition of Scanner Strategy. We'll be looking at one of the oldest methods known to traders, the 52-week highs and lows breakouts. I'm going to explore a new method to exploit the strategy today. Most of the contemporary research done on 52-week shows us that stocks hitting these levels continue their movement with increased momentum. But when I talk to traders, they seem to lose money when they trade these stocks during this period. Why this contradiction? Before the advent of internet trading, the 52-week highs and lows were genuine breakouts and the market continued moving beyond there with increased momentum. But over time, as more people caught on to this simple method and the speed of information increased, it resulted in extreme volatility with false breakouts, and this trading edge was lost. Considering this changing environment, I have developed a modified method which can be highly profitable for the patient and the disciplined trader. Let's get right down to the steps that one must follow to trade this breakout effectively. First, regularly scan the market for stocks hitting 52-week highs and lows. The Market Pulse app has several predefined scans that can do this for you, namely the new 52-week highs and lows, the 52-week high range, and the 52-week high-low on increased volume. I generally like to scan for new 52-week highs and lows and ranges. If you want to filter stocks further on high volumes, you could alternatively scan for the increased volume as well. I generally like to limit my scans to Nifty 200 and sometimes extend it to the Nifty 500 universe. You should pick the universe you are comfortable with. Create separate watch lists for stocks hitting highs and lows respectively. I like to keep my scan results on a separate watch list for highs and lows. I want to be able to go back to this list every day and study how the stocks that are hitting new levels are performing, so I can find that opportunity to enter them based on my strategy. I run the same scan for the 52-week low next and I get no results. Then I run the 52-week high range scan and I get 3 results here. I save it to a watch list. Once we have identified our stocks, we can further fine-tune our list by only shortlisting stocks with good volumes and volatility. I have limited myself to the Nifty 200 to start with, which are liquid stocks. And now here begins the waiting game. We now wait for a correction in our stock. These stocks can go through periods of consolidation and find support near their previous swing highs and lows or near the 20 or the 50 EMA. I have seen this phase last generally from 2 to 5 weeks. Our objective is to enter a long position when the larger trend resumes with a tight stop loss below the recent swing low. Most of these breakouts tend to occur in the first hour of trading, so be vigilant during that time every day. Now let's go to the watch list we've created and take a look at the charts of these stocks. I open the first chart, HDFC AMC. I add a 50 period EMA to my chart. I see the chart over the last year. It has been in a sustained uptrend. Now I want to add some supports and resistances to see the recent levels it has touched. The recent swing low is at 2103 and the last 52-week high is at 2372. Okay, I fine-tune my supports a bit. You can also observe here that the stock, after touching its 52-week high, went through a consolidation phase and touched the 20 EMA on 3 different occasions. The last 3 days clearly indicates a strong recovery. Yesterday's open would have been our ideal entry, but one can still go long in the stock with a stop loss of 20.98. If we open the chart for Berger Paints next, we can see that the stock broke out above its previous 52-week high at 350 and has continued its strong up move. Now it is consolidating sideways. I would like to keep the stock on my radar in the coming days, and on dips and consolidation around its 20 EMA or the rising 50 EMA, or maybe even the 350 levels, we can look for reversals and look for opportunities to enter the stock. Most traders tend to focus only on the 52-week highs. I suggest you also trade to the downside, that is the 52-week lows, just as often as you trade to the upside. the momentum is quicker to the downside as opposed to the upside more often than not. We really appreciate your feedback and comments. Stay tuned in the coming weeks for more strategies. Thank you.